Welcome to StockStream's Education Series. This presentation is brought to you by StockStream Financial Services in collaboration with MyStockStream.com. Today, we will look at the basics of Elliott Wave Analysis. Trading inherently is risky and may not be suitable for all investors. Therefore, we recommend that you treat the contents of this presentation strictly as educational and informational in nature. Our goal at StockStream Education is to increase the awareness level of investors. We propose that you learn concepts of analysis using StockStream Education's training material. Then, follow StockStream experts at MyStockStream.com to see the techniques you have learned being applied to live markets. Once you are comfortable with a particular technique, we recommend that you conduct your own analysis, get it reviewed by a StockStream expert, and then put it to trade in live markets. Elliott Wave Analysis is one of the most powerful techniques available to technical analysts. The concept of Elliott waves was proposed by Ralph Elliott Nelson. Elliott Wave Analysis assumes that the markets move in predefined patterns that can be predicted. If we can correctly analyze the current state of the market, we should be able to predict the future direction on movement based on these predefined patterns. Elliott waves consist of impulse and corrective waves. An impulse wave is a movement in the direction of the trend and can be broken down into 5 subwaves. A corrective wave is a movement in the direction opposite to the broader trend and can be broken down into 3 subwaves. As pointed out in the previous slide, an Elliott wave pattern consists of an impulsive wave and a corrective wave. The impulse wave can be broken down into 5 subwaves. Out of these 5 subwaves, waves 1, 3, and 5 move in the direction of the trend, and waves 2 and 4 move opposite to the direction of the trend. Each of the subwaves 1, 3, and 5 within a broader impulse wave is an impulse wave in itself and can be divided into 5 subwaves. A corrective wave, on the other hand, moves opposite to the direction of the broader trend. A corrective wave can be simple or complex and begins after an impulse wave is complete. A simple correction can be divided into 3 subwaves, of which waves A and C move opposite to the direction of the broader trend, while wave B moves in the direction of the broader trend. As we have seen in the previous slide, an impulse wave is a move in the direction of the broader trend. Each impulse wave can be subdivided into a 5-wave structure. Waves 1, 3, and 5 within a broader impulse wave are also impulse waves, while waves 2 and 4 are corrective. Each of the waves 1, 3, and 5 follows an impulsive wave structure, while waves 2 and 4 follows a corrective wave structure. An impulse wave follows each of the following rules. If any of these rules is violated, then the wave structure is not impulsive and the wave count needs to be reevaluated. The rules are as follows. Wave 2 only retraces a fraction of wave 1. Wave 4 only retraces a fraction of wave 3. Wave 4 bottom should be above the wave 1 top. Wave 3 top should be above the wave 1 top. Wave 3 is generally the longest among waves 1, 3, and 5. Wave 3 cannot be the shortest amongst waves 1, 3, and 5. An extension is a special case of an impulse wave, where one of the waves, 1, 3, or 5, is elongated. An elongated wave consists of a 5-wave structure at the same level as the broader impulse wave that it is part of. Generally, wave 3 is the elongated wave within an extension. In the figure shown, we have a wave 3 extension within the broader impulse wave structure. A truncation is another special case of an impulse wave, where the wave 5 high is below the wave 3 high. This pattern generally occurs after a strong wave 3 move. An ending diagonal is a very bearish indicator. It is formed as wave 5 at the end of an uptrend. This pattern indicates exhaustion of the up move and is generally formed after a strong wave 3 move. Even though wave 5 is an ending diagonal, it can be divided into 5 subwaves. Each of these waves only consists of 3 subwaves. This marks a deviation from the common impulse wave structure. A corrective wave moves in the direction opposite to the broader trend. A correction can be simple or complex. With the exception of triangles, corrective patterns are never in 5 waves. Simple corrective patterns are zigzags, flats, triangles, etc. A complex corrective pattern is formed by joining simple patterns with an X wave. Thus, we can have 2 zigzags joined by an X wave, or a flat and a triangle joined by an X wave. A zigzag is a 3-wave corrective pattern. The 3 waves are called waves A, B, and C, respectively, with waves A and C moving opposite to the direction of the broader trend, and wave B moving in the direction of the broader trend. The waves A and C can be subdivided into 5 waves, while wave B consists of 3 subwaves. Also, the top of wave B should be lower than the start of wave A, and the end of wave C should be lower than the end of wave A. Zigzags can also be part of complex corrections, joined by an X wave either to another zigzag pattern or to other corrective patterns. A flat is also a 3-wave corrective pattern, with wave B ending close to the beginning of wave A and wave C ending close to the ending of wave A. Waves A and B can be subdivided into 3 waves, whereas wave C is subdivided into 5 waves. A flat can also be part of complex corrections, joined by an X wave either to another flat or to other corrective patterns. A triangle is a corrective pattern consisting of 5 waves. Each of these 5 waves can be divided into 3. For triangle correction, price generally trades with a converging channel before an eventual break in the direction of the broader trend. A triangle can also be part of complex corrections, joined by an X wave either to another triangle or to other corrective patterns. The example shows a clear 5-way impulsive move higher, followed by a 3-wave corrective decline. The next move could be either an X wave, followed by a complex correction, or the beginning of an impulsive wave. Based on this analysis, our trade plan would be to buy this currency pair with stops below the wave C lows and targets above the wave 5 highs. If you have any questions, visit mystockstream.com and contact us at StockStream Education. You can also contact any of our other experts covering Forex, commodity, or equity markets. We will be more than happy to answer any of your investment-related queries. Thanks for listening to this presentation and have a great day.